So guys, in the month of June, I received 10 different payments, many of which came from some of my favorite dividend-paying stocks in ETFs like Visa, Johnson & Johnson, and of course, SCHD. And in this video, we're going to go through each of those payments and add them all up to reveal my dividend income for the month, as well as my total income received so far in 2025. But before we get to those, I want to hear from you. Leave me a comment below and let me know what were some of your highest dividend payments this month and which stocks did they come from. I would be very curious to hear if we have any of the same ones. Anyway, the first dividend payment I received this month came from none other than Visa, who paid me about $14 for the month. Not a bad way to kick things off. And I'll tell you what, overall Visa has been doing really well this year. If we take a look at the share price performance over here on SnapStock, it is down a little bit in the last 30 days, down about 1.6%. But if we zoom out looking at the year to date, Visa's on a roll. It's up 12% so far in 2025, and it's actually doing even better if we zoom out over the last 365 days, where it's up about 30%. With that, if we take a look at my Visa position, this is one of the largest positions in my portfolio. It's in the number 2 spot. Right now I have 23.74 shares at an average cost of almost $270 per share. So right now the current share price at $350, and that's about $80 above my cost basis. That's going to leave me up about 30%, so we're doing pretty well with Visa. And by the way, guys, what we were just looking at there was from Snowball Analytics, which is actually the sponsor of today's video. This is hands down my favorite portfolio tracker out there. You guys would really love using this, and I want to tell you a little more about it. One of the most essential tools for any investor is a solid portfolio tracker, and Snowball Analytics is like the Swiss Army knife of portfolio trackers. I've been using this platform pretty religiously to track my own portfolio for a while now, and I can't tell you how impressed I am with how much insight it provides into my portfolio. As you can see, the layout is very clean and intuitive, and the platform overall is pretty easy to navigate. Plus, it's packed with more charts and graphs than you can count, which speaks to just how much data you get, not only for your portfolio, but also at the individual stock level as well. I mean, pretty much anything you want to know about a company's financials or dividend history can be found here within the platform. Now, in my opinion, what really sets Snowball Analytics apart are the features it has specifically designed for dividend investors. I'm actually convinced this platform was made for us, and here are some of my favorite features. First off, Snowball tells you your total returns by default throughout the platform, which may sound like a small thing, but it's crucial for dividend investors because it doesn't neglect the dividend income we receive when calculating returns. Most other portfolio trackers will only show your share price returns, which is really only half the equation, so it's refreshing to see dividends factored into these calculations. Additionally, Snowball has a pretty in-depth event calendar that keeps you updated with upcoming news, dividend payments, and any other important stuff going on. And they even have a dedicated dividend calendar so you can see who's paying you each month, when they're paying, and how much they're paying. Beyond these tools, Snowball also has a community section where you can check out other users' public portfolios to see what others are investing in, which is always a fun thing to look at. Plus, they have stats for stocks and ETFs that show what's trending and what's popular among other investors. This makes Snowball not just a killer portfolio tracker, but also a great place for dividend investors to get new investing ideas. So overall, if you're looking for a great portfolio tracker, which once again is something that every investor needs, then I highly recommend you check out Snowball Analytics, which you can actually do for free. All you need to do is click the link in the description of the video or in the pinned comment, or just scan this QR code right here to get a free 14-day trial. And if you like it, you can save 10% on your subscription when you use code Ryne Williams. I really love using Snowball Analytics, guys, and I know you will too, so definitely check out that 14-day trial, and don't forget to use code Ryne Williams to save 10% on your subscription. Anyway, getting back to it, the second dividend payment I received in June came from Zoetis, which is the newest addition to my portfolio. So this is the first dividend payment I'll have received from this company, which is very exciting. And they paid me almost $11 in the month, bringing our total so far to $24.95. And unlike Visa, Zoetis has had a pretty tough 2025 so far. In the last month, the stock is down 4.66%. And the only reason I can see for this drop, from what I can tell, is that they were downgraded by some analyst, which in my opinion is not a big deal at all. I'm actually happy if the share price goes lower just because of that. So that's what brought it down in the last 30 days. We'll take that pullback, and if we zoom out looking at the year-to-date performance, that's going to bring Zoetis down into the red. So far in 2025, the stock is down about 2.8%. Now looking at all of my transactions, I have been buying Zoetis hand over fist. I bought it pretty much every single week going back to like mid-April. It looks like my first purchase was on April 11th, and like I said, I've been buying it very steadily every week since then, which if we look at my overall position is going to leave me with about 33 shares at an average cost that is pretty in line with the current share price, so I'm only up just a little bit. I shouldn't really expect anything more. I mean, I've only held the stock for, what's it been, about 2.5 months. So I don't know, I think we're off to a pretty decent start. But anyway, this brings us to the third dividend payment I received. Sticking to the healthcare sector, this one came from Johnson & Johnson, who paid me about $53 for the month, a very solid dividend payment from these guys. And that's going to bring our total so far in June to about $78. And Johnson & Johnson has actually had a pretty decent year so far. In the last month, it's about break even, up about 0.1% there. But if we zoom out looking at the year-to-date performance, it's up 6.4%. Not too shabby for J&J. With that, if we take a look at my position here, I have about 40.8 shares at an average cost that is a few dollars above the current share price. So now would be a pretty decent time to average down on my J&J position. And this is something that I've thought about doing. I've been buying so much Zoetis lately that it's been hard for me to want to buy anything else, but I've definitely had my eye on Johnson & Johnson. And if for some reason I decide to hit the pause button on Zoetis, which at the moment I'm not really planning to, but if I was, I would not mind swooping up some more shares of J&J. At any rate, this is going to bring us to the fourth dividend payment I received in June. This one came from Chevron, who paid me another pretty solid payment, almost $34 for the month. And that's officially going to put us over the $100 mark, leaving us with a total so far of $111.82. And I actually just recently added a decent chunk to my Chevron position after selling out of Altria Group recently, which a lot of you guys know I made that move. I made a full video on it, but after doing that, I reinvested some of the proceeds back into Chevron and ended up picking up 12 extra shares at an average cost of $144.71. And with those 12 shares, that's going to put me at almost 32 shares of Chevron at an average cost of $124.89. So we're up a little bit. The dividends give us a nice boost as well. So things are looking good with Chevron here. But now that brings us to payment number 5, guys. This one came from one of my favorite dividend growth stocks. We're talking about SnapOn, who paid me $19.21 for the month, bringing our total so far to $131.03. And SnapOn has had a rough start to the year. In the last month, the stock is down 1.7%. And if we zoom out looking at the year to date, it's seen an even bigger pullback. It's down 7% so far in 2025, but it is still doing very well over the last year. In the last 365 days, the stock is up 20.3%, which is going to leave my position looking real good. I have about 9 shares of SnapOn at an average cost of about $211 per share. With the current share price about $100 above that, that's still going to leave me up in the green by quite a bit. And I would not mind if we saw a bit more of a pullback. I would love to add more to this position, but it's just so far above my cost basis. And granted, the company is growing, so I should be okay paying for a share price above my cost basis. And so kind of what I'm thinking from here, if we see SnapOn maybe get, somewhere below $300 per share, I wouldn't mind adding more to it again. But that's kind of what I'm looking for the time being. And now jumping over to this next batch of payments, this one's actually a double whammy. I actually got paid twice from Main Street Capital Corporation in June. The first of which was for $14.07. That was their regular monthly dividend. And they also paid a special dividend this month. And for me, that was $16.88. But with these two payments combined, that's going to bring the total so far in June to $161.98. And my Main Street position is looking pretty solid, guys. I have 56.25 shares at an average cost of $40.66. The current share price is about $18 above my cost basis, so that's going to leave me looking real good both in terms of share price and including dividends on a total return basis. This is a very small position for me, though. It only makes up 3.3% of the total portfolio. And then moving right along to this next dividend payment, which came from the other monthly payer in my portfolio. This one was Realty Income. And for the month, Realty paid me $29.21, which brings our total almost to $200, not quite. We're sitting at $191.19, and Realty Income is actually having a killer year, guys. In the last month, the stock is up about 4% right here. So not too shabby for Realty Income, and if we zoom out looking at the year to date, the stock is up almost 9%. So 2025 has been good to Realty Income so far. And that's going to leave my position looking pretty good. Realty Income is one of the larger positions in my portfolio. It's actually number 5 in my top 5, making up 6.4% of the total portfolio. But I have about 109 shares at an average cost of $53.56. So the current share price is a few dollars above that right now, which is going to leave me in a good spot, both looking at the share price and including dividends on a total return basis here. But now, guys, this is going to bring us to the 8th stock that paid me in June. And hold on to your socks, because this was a whopper of a payment, guys. This one was from Blue Owl. They paid a special dividend this month, and for me, I received $1.30. I know, very, very impressive. But anyway, that's going to bring our total so far for the month to $192.49. Now, like with Chevron, I also bought a big chunk of Blue Owl recently with the proceeds from selling out of Altria Group. I added 51 shares to my Blue Owl position, picked up those shares at $14.76. And even with all those extra shares, that's still going to leave Blue Owl third from the bottom in terms of position size. This stock only makes up 2.65% of the portfolio, but nonetheless, we are building that position up. I have 181.4 shares at an average cost of $13.82. So we're seeing a slight gain just looking at the share price. The dividends definitely give much more of a boost there. This is a very high yielding stock. So a lot of the returns, or most of the returns I should say, are going to come from dividends here. But anyway, guys, now moving on to payment number 9. This one is also a relatively new position in my portfolio. I've only received maybe 2 or 3 dividend payments at this point. This is Clear Secure. And for the month, Clear paid me $16, officially bringing us across the $200 mark for the month, leaving us with a total of $208.49. And Clear Secure has been on a rampage lately. Look at that share price. In the last month, it's up 6.9%. And if we zoom out looking at the year to date, it's not as impressive. It's actually in the red, down about 1% so far for the year. And I will say this is one of the worst performing positions in my portfolio. It actually might be the worst on a total return basis. It looks like it's the only one in the red. But nonetheless, guys, I have 128 shares at an average cost of $28.91. I don't think this is a terrible average cost. I mean, the current share price is a couple dollars below that, but I do think over a longer period of time, we'll definitely make up that lost ground and then some. Clear Secure has been a very aggressive grower, so I'm really looking forward to seeing where this company goes. Anyway, guys, those are all of the payments I received in my taxable account, but I still have one more over from the Roth IRA that I want to share with you, and I actually haven't received this dividend payment yet. It should be coming in the next couple of days, but I still wanted to mention it nonetheless. This one, guys, is SCHD. I'm very excited about this one because SCHD should be paying me about $112.50 based on their distribution schedule. They should be paying out, I think, about 27 cents on June 30th. It may end up being a little bit more. It may end up being a little bit less. At the time I'm recording this, they haven't officially announced it yet, so we'll see what happens. And this, guys, will be officially my highest dividend payment received of all time. Not only actually will it be my highest dividend payment ever, but it's also going to be the first time that I ever received a single, individual payment over $100, my first 3-figure dividend payment. So that's going to be very cool, guys. And taking a look at my position real quick, I have 409.5 shares of SCHD at an average cost of $25.89. And my goal by the end of this year is to hit 450 shares of SCHD. That's what I'm shooting for. But as you can see, on average, I've been picking up, somewhere between 4 and 5 shares of SCHD every single week. So I think we're absolutely going to knock that goal out of the park. And honestly, it's more likely that I end up with somewhere closer to 500 shares by the end of the year. But anyway, with that final dividend payment from SCHD, that's going to bring our total income for the month to $320.99. And this is the third time that I have brought in over $300 of dividends in a month. I really love seeing this, and I'm really happy that this is happening more often. And this month's income is a huge gain compared to this time last month. In June 2024, I brought in $172.36, which represents an 86.2% year-over-year gain, which on the surface sounds very cool, but it's not as impressive as it seems. There's actually a very simple explanation for this very substantial year-over-year increase. The reason for it is because last year in 2024, SCHD paid out in July instead of June. So we're missing that payment from June last year, and that's why there's such a big jump year over year. And also because SCHD paid in July last year, that means that this upcoming month, we're probably going to see a year-over-year decline. So it really all evens out in the end. But I will take it, guys. Any month over 300 is good in my book. And looking at this on a year-to-date basis, so far in 2025, I brought in $1,677.59 in dividends, which is a huge 33.7% increase compared to my year-to-date income from 2024. In the first 6 months of last year, I brought in $1,254. So that's a very big year-over-year jump. Anyway, now looking at a quick recap of all of this month's payments, we saw some pretty big year-over-year jumps on an individual basis. Visa saw a huge year-over-year increase to the tune of almost 81%. Johnson & Johnson as well, almost a 30% increase. And then SnapOn was actually pretty impressive too, 15%. And SnapOn's actually was all from dividend increases. I haven't picked up any more shares of SnapOn between last year and this year, which I think really just speaks to the power of dividend growth. Love to see that. Realty Income, we also saw a pretty nice increase, about 11%. Blue Owl headed in the opposite direction, but that's because they paid out a much larger special dividend last year, so really nothing crazy there. And then SCHD, obviously a huge year-over-year increase, about 70%, but we're buying this one every week, so that makes sense. But anyway, guys, that's what went down in June, and now I want to switch gears and show you which companies are going to be paying me in this upcoming month here in July. And to do this, we are back over here on Snowball Analytics looking at their dividend calendar tool, which is one of my favorite features here on this platform. And for the month of July, we can obviously disregard this SCHD payment. We're going to kick the month off here with the payment from VU on July 2nd. That should be $23.77, not a bad way to kick things off. KRC is going to be paying a nice dividend in July, $41.58. VG Properties, even better, $62.71. I love to see that. And Blue Owl, even better, $67 from Blue Owl on July 15th. Actually, looks like July 15th is going to be a crazy day of dividends. This might just be my best day of dividends ever. And when we add all of these dividend payments together, we should be looking at about $273 or so in the month of July. So July is shaping up to be another very solid month of dividends. And with that, if you're in the market for some cheap dividend stocks, then check out this next video right over here, where I'm telling you about 3 of them, all of which look like great buys right now. So click right over here to check those out, and I'll see you in the next one.